go across. We've got Rakesh Patel, Head of Cash Equities Asia at HSBC, joining us from the HSBC conference going on in Mumbai. Rakesh, thanks so much for joining us. Rakesh, 2013 was a very, very good year for Asian and emerging markets. 2014 hasn't seen a bad slide, but we've been seeing a grinding down kind of movement down. Things going down slowly but surely. What's it looking like for you from here?
Look, markets have been choppy so far this year off the back of quite a good year last year, as you mentioned. So I think from the lows of last year, Asian markets rallied by about 25% or so. So we're coming off some of those gains, if you like. I think it remains probably a little bit volatile from here. Markets, particularly emerging markets, are getting used to the fact that the free dollars, if you like, the QE tapering is now on. Free dollars are over. And naturally, when you go through 4 years of basically free dollars, you have a bit of a party, and now you're having a bit of a hangover from that. So people get used to the fact that free dollars are not there. Potentially 2015, of course, rates are going to rise in the US as well. So markets, and particularly emerging markets, trying to digest that, I think, means that volatile markets remain for a little bit longer in emerging markets, at least in the short term.
Rakesh, a combined question to follow up, and one is, given the sort of US data that we've seen in the recent past, including the jobs data on Friday, are you convinced that this taper is going to continue at the pace that we've seen it being announced, which is a further $10 billion cut every month? And secondly, we saw great tumult in emerging markets in the month of Jan, big outflows from emerging market funds. If the taper is to continue, based on your opinion, will we continue to see that kind of nervousness regarding emerging markets?
Look, I think tapering, you'll see that Yellen will speak in the next few days anyway, the Fed chairwoman. I think you're going to see the tapering continue at a slow pace. I mean, they've obviously said that if you get unemployment rates down to about 6.5%, they're going to continue with that sort of, if you like, gradual easing of liquidity inflows into the markets. I think the tapering will continue. And the question now from the US is going to be when rates start to rise. That'll be the next big question, and potentially 2015 for that. So I think the markets, emerging markets, Asia, are going to have to get used to the free liquidity, obviously going and drying up from here. I'm not sure the US is going to pay too much attention to emerging market volatility. They've already made statements to that effect already. They're caring a lot more about the domestic economy, how that looks. So emerging markets being volatile may not be the highest point on their agenda, and they're more concerned about how the domestic picture looks in the US.
How much of this volatility is going to, sort of come to India? Now, this is a year where we're going to see an election take place in the middle of the year. How is India looking to you vis-a-vis other Asian markets or other emerging markets, if I was to expand the portfolio?
I mean, interestingly, India's doing relatively well, right? So you've seen massive inflows into India over the last couple of years. January, the data looks like it's fairly flat to slightly positive Indian inflows vis-a-vis inflows into outflows rather versus other emerging markets. So in general, I think clients are in the market. This is foreign clients, and they remain overweight in that market. You mentioned the election. I think the election is going to be a critical point. So at the conference we have today, lots of investors talking about the elections and the outcome. I think if you end up with a strongly led coalition of some sort with a proper reform agenda, I think the markets will remain fine in India. I think if you end up with the wrong election results, or potentially a hung parliament, or maybe a no government, clearly the market's going to suffer. But from my perspective, looking at it now, international investors are in India. They seem to be steady on India for now, and just waiting for the event, if you like, which is the election results.
Rakesh, is it the results so much that we should be looking at, or is it the fact that we need elections to get over and done with? Because are we getting a little too hung up on who will come into power? Because forgetting history, that anyone who's come to power for the first year after an election, the economy does pretty well. So are we getting too hung up on who will come to power?
Look, I think this is from a foreign investor standpoint. Again, I think there's a real need from foreign investors to see some real strong reform agenda in India. So they've been waiting for a while. You've seen a couple of terms now where potentially it's been a bit slower than they would like. I think they really are expecting and wanting for there to be a strongly led coalition this time rather than any other time before, and for there to be a reform agenda. There's been some disappointments, as you know, regarding reform until this point. I think investors are happy to be in, but I think for this time, rather than waiting once again and not seeing more paralysis, I think they really do actually want to go and see a proper reform agenda led by a strong coalition government. I think if you have the opposite effect, whereby you have a weak coalition or a hung parliament, I think that will be taken quite negatively.
Okay. Even if it's a weak parliament, because our macro numbers are looking pretty good. You got the telecom auction, which should really shore up those numbers again. So fundamentally, we are far better off today than we were in September last year. But yet you think the result of who will come to power is what's going to drive liquidity into the country?
And Rakesh, I'm going to tag on one more question to that, which is the view on the rupee as a result of where we stand today on both the current account as well as the fiscal deficit front. Both those numbers looking far better now than 6 months ago.
Yeah, certainly things are improving, right? So, you know, growth rates maybe 4.5% to 5% probably for this year, depending on who you speak to. That certainly is an improvement. I think maybe growth rate will accelerate, certainly from our view, HSBC's view, into next year as well. That certainly is positive. I think you're right on the telecom license auctions. The numbers there also look quite positive. But I think, you know, the reality is there is a lot more to do in India. It can't just stop at telecom license auctions. It can't just stop at those things. I think, you know, it's a lot more to get done. I think it becomes more difficult to get those things done if you don't have the right sort of coalition put together. So I think it is important. I think if you don't have the right result, I think markets certainly will be affected, but there is much more to get done. And I think the markets after a while will lose patience with that kind of reform agenda if it doesn't happen.
So your view on the rupee? Sorry, Rakesh, if you want to just pitch in with that. How nervous are you about how the rupee will act given this continued taper?
I mean, the rupee, I think, has obviously been, as weakened, obviously, last year, has come back to a more reasonable level. Our view on the rupee is actually flat for the balance of the year. It does feel like, from an RBI governor perspective, it's actually getting ahead of the curve. So we're expecting, as a house, for there to be 1 or 2 more rate hikes to come through. That will obviously go and protect the rupee. So not tremendous rupee weakness from our perspective, and clearly rate hikes is going to help support the rupee at the same time.
Rakesh, if I can just try and get in a specific question on, okay, so the market's obviously hoping, and I'm not going to ask you to say it, but hoping that a Modi-led government will come into power. Given the record of the Congress-led government in the last 6 months, should we be so worried if they come to power? Because what they've done in the last 6 months has been pretty good, hasn't it?
As you say, I'm not going to speculate on who's going to win the next election, but I think that there is an anticipation, whether it be Congress or BJP, an anticipation that a strongly led coalition is actually what you need. There would be a question mark around what changes have happened in the last 6 months regarding reform from the Congress and whether that's sustainable going forward. I think people want to see that after the election, for the next several years, whether it be BJP or Congress, that actually the reform agenda continues, and that I think is important. Execution is a key part of this, right? So once again, an election, a result, a reform agenda is announced, and then clearly the execution of that agenda is also very important as well.
Quick last question, Rakesh. Sectors, stocks that you like in India or that you don't?
I think if you do see the right kind of result from the election, if you do see a pickup in growth going into next year, which is actually our view, you know, potentially buying some of the cyclical stocks which have been bombed out would be the sensible way to go. So things like autos would be interesting. Other cyclicals may be interesting as well, infrastructure as well, but maybe into the second half of the year.
All right, we didn't get a chance to discuss China, but we're out of time. Rakesh, thank you very much for joining us. Rakesh there of HSBC, head of Cash Equities Asia, that is, talking you through how foreign institutions are looking at the India story this election year.